doing this morning? We need to talk about Skyler Olson, Zillow's chief economist, telling all of us how to make money in real estate. We need to acknowledge that FedEx earnings tonight will be important. We need to talk about some report from Altos Research. And I want to give a special shout out to Coach Carlson. Coach Carlson was gracious enough to interview one rental at a time. Go ahead and check out his channel. It went live yesterday. 60 minutes of the coach asking me questions and talking about one rental at a time. So thank you very much for that. So where should we start? Why don't we start with Tiger Global? Remember what we talked about. We've talked about billionaires. We've talked about private equity struggling for liquidity. The best analogy that I've come up with is some companies are struggling for cash, aka liquidity. I want you to think about this like oxygen, right? It doesn't matter what their balance sheet says. Their balance sheet could say they are billionaires. The balance sheet doesn't matter. This is why when I hear people talk about having a net worth of $1, $2, $3, $4 million, I chuckle. It doesn't matter. It's your cash flow statement first, your income statement second, and then third, and a distant third, is your balance sheet. Because in times of stress, aka liquidity drying up, your beautiful shiny assets that you thought were worth $1 million, 10 million, shoot, $1 billion, are not worth that. And they are not worth that even close. So what is Tiger Global doing, folks? If you don't know who Tiger Global is, this is a private equity firm, hedge fund, really private equity, that went on a huge shopping spree for private companies. They were investing big chunks of capital. They were kind of like the drunk sailor buying rounds for everyone. They were throwing money out the window as fast as possible, getting these deal sheets. And you know what happened? They are now shopping their portfolio. Every company inside their portfolio, they are shopping. Hey, Adam, thank you very much for the super chat. Good morning, good morning. I appreciate all the super chats. Thank you very much. If you ever want to get a shout out on one rental at a time, that is one way to do it. So Adam, thank you very much. But yeah, folks, Tiger Global, Billionaire Barry, there will be more. This is the pain that Jerome Powell has frankly been seeking. I know there's a lot of talk track. I know there's a lot of doom about Jerome Powell wanting to raise unemployment. That's not where he's targeting. He is targeting the 1%, the illiquid billionaires who did not listen or heed warning from his Jackson Hole speech. There will be billionaires that are no longer billionaires. There will be companies writing down hundreds of millions of dollars in the next couple of years. This race has started and the pain is out there. Tiger Global can't get a bid for any of their private companies. That tells you how dry or painful the environment is. And of course, Billionaire Barry has already highlighted that for us. So again, let me be clear. I don't think Billionaire Barry goes bankrupt or anything. He is of size, but he will lose assets and others like him. They will extend and pretend. They will raise cash. They will sell toys. They will sell yachts and private planes and things because they need cash, aka liquidity. Lots and lots of stuff going on. I wanted to talk about rates. We now have the market open. It looks like once again Dan Byrd called the morning. Obviously, it's very early. The market's been open for a whopping 62 minutes. But it does look like the market is heading down. We're going to retest the 4,300. I think that's the mark that Dan talked about it being a healthy pullback. I am personally watching rates. Rates matter to me. It matters to housing. I've seen rates come in, and maybe we are starting the slow walk down. Why do I say that? Because I think it is becoming painfully obvious, even to the doomers, that inflation is rolling over. Remember, folks, we've got the first real big drop given the base effect to 4. We even have a larger base effect next month. It could take us to 2.9. And now we have housing rolling over, or aka shelter. And thank you to Danielle DiMartino Booth, one of the tweets that I saw this morning. It looks like used cars are rolling over as well. So again, looks like a couple of the very large components of CPI, and specifically CPI core. Remember, core has been very sticky. We are heading into an environment where inflation could be 2.5, 2.5, kind of in September or October. Again, much sooner than most people expected. Also, the inflation expectations are crashing. The Fed put out a report talking about inflation expectations, and it is dropping precipitously. I did not write down the number, but I read that article while we were out yesterday shopping. I think it said it was at, I don't want to say, because I seem to recall it was 1.87, but that seems too low. Needless to say, inflation expectations are heading down. I will find that number and report on it tomorrow. So again, inflation is heading the right direction. Why is that important? Because we have a large spread for mortgage rates over the 10-year. And I think as we get validation that the Fed is done, and we get in the spread coming in, we could see rates hit the 6% that we've talked about in August or September. So again, lots of stuff going on. Let's talk about housing. Let's go to Altos Research. Again, somebody you should be following, Mike Simonson from Altos Research. They put out the most accurate information, in my opinion, on housing. Once a week, they tell us what's going on with active inventory. Now, active inventory is not sold. Shoot, active inventory is not even pending. But if you want to get the latest and greatest info on housing, you look at the activity. So what's going on? Well, we now have 451,000 single-family homes available to purchase across the country. So who cares? That's a number. Let me put it in context. We are only 7% more inventory than last year. That should frighten all of us. Because again, inside this number, we obviously know that there's some stale luxury listings, there's some junk that is overpriced, and then the rest of the market is hot, hot, hot. Altos Research, again, in the last week said 31.4% of listings, call it 1 in 3 between friends, had a price cut. So we are seeing some sellers go, hey, here we go. Again, I do want to call out, what we are seeing right now in Altos Research is, I think, pointing at it clearly, again, is 7% matters. Frankly, if you want housing to heal itself, the best thing that you and I could hope for is 7% mortgage rates. Unfortunately, that's not my call. My call is rates will fall to 6%. 6%, unfortunately, brings demand. But if I am wrong and rates stay at 7, the housing market will heal itself faster because we will have listings pile up, days on market will extend, and we will have true price discovery. Unfortunately, again, I think what is going on is rates are starting to fall ever so slightly. It does look like median price is up. Again, these are listings, actives, so take it with a grain of salt. 455,000, that is down 1% from last year. There are 386,000 homes in contract. That is down 15% from last year. And there were only 68,000 new contracts last week. That is down 21%. So again, lots and lots of stuff going on. Let's go to Skyler Olson. Skyler Olson, Zillow's chief economist. Zillow's chief economist, again, Skyler Olson, tells us that the easy money, the quick money, the chunk money with flips is over. Skyler, if you watch One Rental at a Time, how you doing? I could have told you that a year ago. We bring on 3 or 4 different flippers every week, and they told us this is done. If you're going to flip, stay below the median, buy the junk that doesn't appraise or go through inspections. But yes, the easy money is over. What does Skyler Olson, Zillow chief economist, recommend? Investors should adopt a buy and hold and build equity. Now, in that statement or in that part of the article, she's actually talking to you, the homeowner. If you are a homeowner with a below market interest rate, congratulations, you hit the lottery. Pay off the debt chunk at a time. Now, if you want to become a landlord and build the passive income, make sure it cash flows, make sure you get 30-year fixed rate debt. Yes, the chief economist, Skyler Olson of Zillow, is saying being a One Rental at a Time fan, student, follower is a good thing because we do the work. We don't bet on appreciation. We only do good or great deals. So again, it was very interesting for Skyler Olson, chief economist of Zillow, to basically say, hey, go do the work. Find the good deals. They're out there. So that was very, very cool. Let's talk about FedEx earnings. This is going to tell us what's going on in the economy. Again, I think the time for shipping stuff, aka cardboard boxes, is over. It will be very interesting to talk about shipments. FedEx will give us a view of the world, which I think is important. I think we see China slowing down, what is going on in Europe, what is going on in North America. So again, I will be tuning in for FedEx earnings. It comes in after hours today. I think that will be an important one. Some of you have asked about my course, how to get started one rental at a time. What are we doing there? Are there any deals, things of that nature? The only thing I can tell you is I'm still doing the buy the course, get 2 free $50 courses. So if you buy the course at $3.99, you're going to get $100 in free courses of your choosing. You want to buy the buy box? Great. You want to get the mastermind 6 hours? Great. You want to talk about debt equity? Great. Whatever you want, you can have. And of course, we are still doing the super special on the mentor option. If you do the $7.99 option, I will give you all the courses for free. That is something I'm doing through the month because we are going to raise that price to $9.99 and make that as standard going forward, right? If you buy the mentor option, which includes 30 minutes of one-on-one time, you will get all of the 50 courses. So if you want to do that, you might as well buy it now. So you save $200. And again, as I've mentioned, if you have bought the mentoring option before, even if you bought it much cheaper, I'm going to manually go in and give you everything. I just think that's a good thing. If you spent the money on the mentoring option, why should you be shortchanged? Just what I like to do. So that'll take me a week or two to get through because there's hundreds of people have done that and I'm doing it manually. So again, let's get into that. Looks like China has started to once again try to stimulate their economy. This is something we have to watch for. There was huge expectations that the second largest economy by population and second largest economy by GDP would pull the world out of its funk. But it looks like that is at least not the case yet. The government's going to have to come in and stimulate their economy. They actually cut a couple of key lending ratios yesterday. So we need to watch for that. I do have a question for you. One of the things that's very important is for you to understand where your money is going. I call it getting your money right. So I want to ask you, over the last 30 days, what has been your ratio? Needs versus wants. So all of you all spent a certain amount of money in the last 30 days. Call it $5,000, call it $2,000, call it whatever you want. I want you to go through right now and just estimate how much of it was needs versus wants. Is it 80-20? Is it 50-50? And again, a want is something that you don't absolutely need. You can delay gratification. You can stack the paper. I'm just looking to see what one rental at a time fans are doing. By means, if you're 20% needs and 80% wants, there are no right answers. I'm just curious what people are doing because again, we went from spending 60-40 in every dime we had to kind of maybe 85-15 by the time we were really getting good at kind of stacking paper, discretionary income, things of that nature. So just curious where you are at in your cycle. Maybe it gives you something to think about. Maybe that's a topic of conversation for the family tonight. So take a look at it. One last thing about U.S. housing starts. Blowout number today. There are doomers out there talking about builders crashing and blah, blah, blah. Don't buy it. Housing starts. Let's give you the details. Last month, up 2.2%. Expectations this month, negative 0.1. What happened? I had to double check this number. Up 21.7%. 21.7%. Now, because I do this all the time, one thing you have to know about housing starts is it is a mix and mash of multifamily and single family. So again, sometimes you can get a blowout number like that and it's all multifamily. So I dug a little deeper. Single family homes are up 18.5% year on year. They're up to 997,000. So this was a very single family heavy and multifamily. So again, lots and lots of stuff going on in the housing arena. And then lastly, folks, I want to apologize for yesterday's daily financial news. I am so snake bit by this microphone not working on the Zoom call that I'm doing this from my phone. It seems to work on Zooms okay, but not YouTube Live. So I apologize for that. I did record a new one. I did not delete the old one because, again, I like to just show you that, hey, it messed up. We did it again and moved on. I think that's important for folks. I know there's a lot of people looking to build YouTube channels and things of that nature. Hey, you take your shot like I did. I did 12 or 13 minutes of a video where the mic wasn't working. It was just my computer. It's okay. Mistakes happen. You apologize, you do it again, and you move on. So that's why if you suffered through or maybe gave up on yesterday's daily financial news, I did record a brand new one about an hour or an hour and a half later. So again, take a look at that. And then lastly, folks, we have created a brand new event for you with Dan Byrd talking about understanding chart analysis, understanding risk mitigation, risk sizing. That event is on July 16th. It is 3 hours. I did open it up to 200 people. I did pay for a larger room on Zoom. But thus far, at least as of yesterday, only 5 of you have signed up for that. I'm surprised. When I asked you a month ago who wanted time with Dan Byrd, it was hundreds and hundreds of you said, yes, 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 please schedule something. So again, it is on Eventbrite. I will again try to put a link below that works. And hopefully I will see you there. Like always, if you spend the money on the $47 for the event and you can't attend, don't worry. I will give you the video after. You will get access via the Teachable platform. You will not pay twice. Trust me, Dan Byrd, I've worked with him for 20 plus years. He is going to bring the value. You are going to want to watch it multiple times. That's just how he rolls. If you've seen our Sunday conversations, you know he is deep into this, and this is where he thrives. So again, I look forward to it. I look forward to learning. You are going to get his risk calculator, which is amazing. And again, lots of stuff going on. So folks, like, subscribe, comment, please share the channel. We did cross the 47,000 threshold. We are less than 3,000 away from 50,000. So thank you very much for being here. Thank you all 148 of you that are watching. We do only have 25 thumbs up. So what is that? 16% ratio. So if you can take the time to smash the thumbs up, if you can say hi in the comments, maybe we get these comments going. We can get more and more people to one rental at a time. I know I produce a lot of content. I know I would probably be a bigger channel if I produced less, but that's not going to happen. We're going to keep bringing you millionaires. We're going to keep talking about stuff we're doing in the market today because I'm having fun and hopefully you are too. Remember, buy the event with Dan Byrd. If you want to get the courses, the best way to do it is get some free stuff. You can get 2 free $50 courses, or you can get everything with the mentor option before that price goes up. So take care of yourself, like, subscribe, comment. Bye.